Good morning, everyone. This is T from Simpler Trading. Let's do a little bit of pre-market prep for Tuesday, February 2nd. So the first chart we'll check out here is the volatility index, the old VIX. We do have the daily squeeze firing, which, dragged the market lower last week. But as VIX is slowly but surely trying to work its way back to its own 21 EMA, kind of falling back into this base, it's the first good sign as far as, the market kind of holding up here and eventually turning the corner to the upside. So I would like to see VIX just fall back into this range, back to the 21, but definitely a good start here. Of course, if VIX just kind of reverts to the mean, and then, we just bounce from here, there could be some more downside for the market. But those are the few things we've been covering the last couple of videos as far as, what do we need to see from the big picture, from volatility, from the indexes to be confident that the market is going to brush this off and just keep on pumping higher. This is the most important thing right here. VIX coming back to the 21. Second thing, are the indexes getting back above their own 21 EMA? So the S&P 500 did bounce nicely yesterday. We did get a little bit of a rejection there at the 21, but you can see the futures up almost 1% this morning, getting us well above the 21. So a key thing for the market here moving forward throughout the rest of the week is to hold that 21 EMA as support. If we do end up flushing and breaking back under, I think we could come back down and test those recent lows. So keep an eye on VIX, make sure VIX is at bay. We want to see the indexes holding above the 21. In the Qs, which were very strong yesterday on the backs of Amazon, Microsoft, Google, you name it, Apple, good looking day yesterday, and they're strong again here this morning, up another 1%. So I think just keeping a good solid focusing on the basics here. This is a good start. We're back above the 21. VIX is coming back down to the mean. Let's see if this continues. If VIX begins to spike again and the indexes are once again dropping below the 21, I think we're going to go test those lows. So we shall see. So in the simpler options room yesterday, we did do a couple of earnings trades. And what we like to do a lot of times is, for UPS, for example, last night or this morning, UPS announces earnings. The market makers are pricing in a $10 move. So we sell an iron condor going a little bit further out the money than the expected move. So for UPS here, we sold the iron condor with the calls up at 170 and we sold the puts down there at 140. So if we check out the chain here, market makers are pricing in a $10 move yesterday. If we open up this morning within that $10 move, these options are going to get crushed as the implied volatility is going to suck out all the premium that's been getting pumped in here in the weeks leading up to the earnings announcement. So we're just basically trying to be the market makers, placing a bet that the stock isn't going to make a bigger than expected move. So I'm not sure if earnings have been announced yet. We are getting a nice little bounce here for UPS this morning, but nowhere near our 170 strike on the call side. So we should be in good shape, assuming this is where things open. And we did do the same thing here on Alibaba. So Baba, I believe they were pricing in a $10 move as well, right? Just about $12. So we sold the iron condor and we sold the 245 puts. And on the call side, we sold the 275 calls. So just like UPS, what we need from Baba this morning is an open within our range. Under 275 and above 245, we're going to get some premium coming in from the implied volatility crush, assuming we don't get a bigger than expected move. So both of those look pretty decent right now. And then as far as swing positions, it is a big day for Amazon. So a big push yesterday, and I do have my put credit spread that expires in March with the short strikes down here at 3,000. Pretty much just placing a bet that, over the next few weeks, this weekly squeeze is not going to fire to the downside. Dropping under the short strike there. So I love me some Amazon. Still holding on to an NVIDIA put credit spread. I love the weekly squeeze. We do have earnings right around the corner. Pins also has earnings this week, so I will be holding the put credit spread through earnings. And if I hadn't closed profits last month on a couple different put credit spreads on Pins, I might not be taking the risk of holding through earnings, but I'm basically risking the profits made. I'd like to keep them, but we'll see what Pins can get going here. Few things I'm going to look at today. I do like Blink. So I covered this briefly last night, cover it again this morning. You got a great looking trend here. Just kind of respecting the natural rhythm of a trending stock. Big push off the 21, reversion to the mean. Big push off the 21, and then again, and again, and again, and again. So a good looking daily squeeze. Got your stack moving averages. We got the reversion back to the 21 EMA yesterday. And to go with the theme of the market right now, what is very quickly becoming popular, this is a high short interest stock. So as the daily squeeze tries to fire here, you could get some fuel to the fire with the shorts trying to cover they behind. So I do like Blink. I think DraftKings is a really solid daily squeeze. Earnings is around the corner, so that is one caveat you got to pay attention to. But aside from that, let me show you guys everything I got here. All right, so I am down on the call credit spread hedges on SPX. So, as I said yesterday, who the hell tries to short this market? But we got Amazon, earnings iron condors on BABA and UPS, put credit spread on NEO, put credit spread on NVIDIA, put credit spread on PINS, put credit spread on PLTR. So I think for me right now, it's just kind of a game of patience. If the market does continue to rip here, I obviously want to manage those call credit spreads and get rid of those, but I'm going to be a little bit patient. And I do like how I'm balanced right now. I'm in one of those situations here where there's a good balance to the portfolio. I've got long positions in Amazon, NVIDIA, NEO, PLTR, and PINS. I also have the short position with the call credit spread here on the S&P 500. So, should the market just kind of go flat here for the rest of the week, the put credit spreads hold up fine, and we do got a bit of a chance to take home some profit from the call credit spreads. If the market rolls over for the next couple of days, we might be taking some heat on the put credit spreads, but the call credit spreads are going to bring in some much needed premium to cover any potential losses there. And should the market just explode right back to all-time highs, and this was the ultimate buy the dip opportunity, the money we should make from Amazon, NVIDIA, PLTR, PINS, NEO should certainly more than offset any potential losses on the call credit spread. So that's my focus today. I'll keep you all updated. Probably post a video later on this evening if I close anything or, maybe discuss a little bit of Amazon earnings. But until then, trade safe today. If y'all haven't already, go on ahead and hit the subscribe button, and I'll talk to you in another video.